monitor. I'm just looking at a camera. So it's a weird setup.
Professional. So thank you guys. So should we start?
I feel it's getting a bit of an echo. Do you guys hear that?
You have an echo from me?
A little bit, yeah.
Yeah.
Yeah. Now it's fine.
That's okay. So start. So it's going to be Zoom, okay? So we don't have the fancy decoration, you know, like Philippe just did a interview. So it's just very simple Zoom. So I hope you guys are okay with that. Even we call it a show, it's actually just a Zoom call. Okay.
That's all good.
Right. So okay, let me start. So well, good evening, afternoon, and morning, everyone. So welcome to Crypto Tonight, a new series, The Hour, Deribit Hour, episode 1. We love Deribit. So my name is Yama, and it's my great pleasure to be your host for every Crypto Tonight. I hope you all stay safe and happy. It has been an extremely exciting week. Now let's say all eyes on Beating Cape. So to start with, please join me in welcoming our 4 fantastic guests for tonight. John, the founder and CEO of Deribit. Yes, Deribit does have a CEO, which is not George Clooney. And Philippe, the founder and CEO of XBTO. Kyle, the co-founder of 3 Arrows Capital. And Darius, the founder and CIO of QCT Capital. Welcome, guys. So first, brief introduction. Could you please share a bit about your background? How did you first hear about Bitcoin? And what were like your initial thoughts? Start with John, the CEO of Deribit.
Okay. When I first heard about Bitcoin, told this story already a couple of times, but actually it was a friend of mine in Amsterdam, a lawyer who had some clients who were using Bitcoin for some suspicious activities. And so he was not specifically talking about the Bitcoin, more about his funny clients. And I was asking him, what is this Bitcoin? And he said, yeah, they get paid with this digital money on the internet. And I'm asking him, but what is the central authority behind this money? And he say, no, nothing, is something on the internet. And I'm like, that cannot be, there's something really weird. So so then as soon as I got home, I started looking into it, and well, then I kind of understood that this was something very special. And from that moment I was hooked up, and it was somewhere in, I think, in the winter of 2013, something like that.
Okay, special activity. Thank you, John. So a quick question.
Yeah, well, yeah, like I then,
special activity.
yeah, and then in the months thereafter, I came up with the idea to, there were already spot exchanges. I don't know if there was already a derivatives exchange, but then I came up with the idea to develop this Deribit, basically options and futures exchange.
Question for you. During 6 years building and growing Deribit, what has changed and what hasn't changed for you? And you know, a lot of engineers often worry about the hairline moving up or skin caring. You know, like in pooling office, actually, they are all engineers are using SK2. So I'm not sure about traders. So what has changed and what has changed for you?
I quite not understand your question. I'm sorry. What?
So 6 years building and growing Deribit. So what has changed and what hasn't changed for you? The hairline was a joke.
Oh, okay. No, I didn't. I didn't quite. Okay, so yeah. Well, quite a lot has changed actually. Mm-hmm. It started as a very serious hobby project. Let's call it like that. Like without too many expectations. Kind of an ambition to create this options exchange, and kind of we slowly succeeded in executing this plan. Within Deribit, kind of the team is, let's say that everybody that's worked on Deribit is still with the team. So it's quite a tight group of people and nobody is leaving. So internally, it feels not like things are changing so fast. We're still the same people, still working on the same product.
Okay, thank you. So I hope they're all not single guys in Deribit, because I know like traders only have single life. Thank you, John. Next, Philippe, CEO of XBTO.
Thanks. Yeah, hi, I'm Philippe Bekhazi. I'm the CEO and founder of XBTO. XBTO is 5 years old this year. It's been quite a ride. My background is in trading, financial trading. Little additional information, actually, when I went to college, I actually studied movies and cinema and production. And then I did finance. And then I fell down the rabbit hole of trading and systematic trading early on. I was always into computers, always into tinkering. Randomly, a friend of mine who is now my general counsel sent me the white paper by email in 2010. I looked at it. I thought that's really interesting. I was busy doing other things, so I didn't do anything with it. 6 months later, I was traveling, and a different friend, cousin spoke to me about Bitcoin. He said, "You should be in Bitcoin. Fits you." I was like, "Wow, that's weird." So two different people, two different times. So it started like establishing kind of a trend, and this is kind of the way I look at life. In there's spotting trends. And so I started digging into it. I started doing a little bit of mining on my computer when it was still possible on a CPU. And then I started going to the community and started chatting with people, exchanges, miners, developers, users, and trying to understand how I could fit in the space. In 2014, I visited Africa, and I was like, wow, internet kind of works, but payment systems are just kind of like crazy, dysfunctional, and banks are non-existent or very difficult to very poor value for anyone. So I was like, wow, maybe this is something for Bitcoin. And so I came back, and then in February 2015, I established this XBTO, which is a global liquidity provider, mostly systematic. We trade our own money for the most part. And we since then have branched into corporate investments, mining, advising, a little bit of asset management. We're starting to do a little bit of outside money in terms of beta funds with some alpha overlay. And then we have a venture capital fund that we're opening up. So Deribit is one of our early core portfolio investments. I'm glad to be here with you guys and talk about it.
Take my opportunity to simplify to XBTO without Justin Timberlake. All credit goes to Philippe. XBTO has a basic asset management and some VC, market making, OTC, mining as well. But I know you also run a stable house. And what does it do, and what's its long-term vision?
Yeah, thanks for asking. Stable House is a portfolio, also a portfolio investment. It's incubated within XBTO for the most part. XBTO is the largest investor in it. Stable House is focused on stablecoins. We believe that stablecoins are a trend that's here to stay. It's something that brings a lot of value to the world of moving value around. So it's money on better rails. And Stable House is regulated here in Bermuda. And we are basically in closed beta. And we expect to be open for everyone in Q4. Essentially, it's a clearinghouse for stable coins. We're doing a lot of different things with it. I mean, you can imagine doing remittances, just transfers, payments, merchant payments, settlements for derivatives at some level. We're working with one of our other portfolio companies on something like that. There's a lot of use cases, and we're really excited about it. And it's just the early days. So, yeah, I'm happy to talk about it more, but I know it's about Deribit today, so.
We hope to know more about it. Thank you, Philippe. Now moving on to Kyle. I've been here, Kyle, so I hope you're not getting bored yet.
Oh, appreciate it. Thanks for having me, Yama. Three Arrows is a hedge fund, founded it 8 years ago. And my background was derivatives trading. So I was an equity exotic derivatives trader in Asia before that, traded things like accumulators, knock-in, knockouts, exotic products, basically. And what drew me into Three Arrows at first, I guess, when we founded it, was FX markets. And we had a pretty good run early on in that. And on the back of that, we traded a bunch of different assets. We traded also equities, derivatives, but crypto was one of them too. And it was the lowest priority by far. It was the least liquid. It was the least interesting. You could only, we were doing futures basis trade on, there were only a couple derivative exchanges that predated Deribit. The one we were using was ICBit. And yeah, and they went bankrupt too, by the way. So it was really not very interesting. So yeah, so we didn't really get pulled in again until the 2017-18 phase, where I had heard that some of my earliest traders, actually the first trader I ever hired, had done pretty well, like really, really well. And I realized that perhaps I should try that too. And we pivoted the entire firm over to crypto at that point, and it was the right decision. So we now do a lot of market neutral trade, borrow. We do some primary investment, including Deribit and DeFi and other things. Yeah, and we're crypto focused fund now.
So almost everyone I talk to speaks very highly of the Ares Capital, like Jansen, BlockFi, pooling, and Who Wallet. So you did a good job, Kyle. And quick question, and also you run the, I know you run the biggest borrowing desk, but still quick question for you. What are you most bullish today in derivatives?
Well, the options market's just too small. So like a fun anecdote is, sure, someone's gonna mention this later on the interview at some point, but 3 days ago, Bitcoin options traded their highest volume day, over 50,000 BTC, which is, for your fiat listeners, over $500 million. And the day after, one of the bigger traders, another firm called Amber AI, tweeted that options liquidity, options were moving, options was very interesting, but the liquidity was terrible, or something to that effect, which was interesting to me because I was thinking this was the highest volume day Bitcoin options ever had. What do you mean it's terrible? But it is. It's getting better. It like this market, there are a few markets that can 10x and still be too small, and Bitcoin options is one of them. 1% of the overall derivative market today. Equities, or FX, which I had traded before, 60 to 70%. This market can get 10 times bigger and still be 5 times too small.
Every time talking to Kai, I feel like I want to buy more Bitcoin, but already I got Thank you, Kai. Now moving on to Darius. Do you still remember the question, Darius?
Yeah. When I first heard about Bitcoin, yeah. Well, QCP is a trading firm based in Singapore. We do prop trading, we do some asset management, we help out with trading strategies. We focus a lot on Asia OTC in local markets, and also a lot on derivatives, especially options. So I come from a similar-ish background to Kyle, and especially was focused on FX and NDFs. So basically made my career, made my P&L a lot from inefficiencies in markets, right? Especially in Asian markets, a lot of arbitrage between local markets where there are capital controls. And that's how I first heard about Bitcoin, because I heard there was an asset that was being arbitraged in China, Korea, Malaysia, India, and I was like, that was right up my alley. So I was like, I have to go and find out what this is. So that's how I started doing arbitrage in Asia, and that's how we started QCP, and that's where we are now.
So spot OTC is actually quite competitive and takes a lot of resources, but derivatives OTC seems to be the next wave. So what's the outlook for the OTC market, Darius?
Well, I mean, if you look at the parallel between crypto and FX, so if you look at FX options, the FX options market is almost 100% OTC. Not much of it is traded, on order books. So, crypto is developing to be somewhat of a hybrid. We have a lot of we have a centralized order book liquidity that we see in Deribit, but we also see a lot of customized contracts in OTC. So we do about 50-50. I think I used to think that it would be a lot more OTC as a market grew, but I think now that it's probably going to be maybe 50-50 or 75-25, 75 being more order book liquidity, whereas 25 is probably where guys who need customized contracts, physical settlement, or odd expiry dates, that will go to the OTC side. But yeah, I think like Kyle said, it's a growing pie, so it's not going to be which one wins out. The whole pie is growing, so both markets are growing big. Yeah.
Thank you, guys. So next, let's move on to our next session. Why we love Deribit. So I know Philippe, Kyle, Darius, you all trade on Deribit and invest in Deribit too. So yes, the whole world already know you all love Deribit. However, besides the fact that Deribit has a charismatic sort of CEO, John or George Clooney, could you please try to share non-biased opinions about why choosing Deribit to trade and invest? And we have been seeing so many other options exchanges come into space, like Bekhazi, OKX, Binance, and some new ones this week as well. And what keeps Deribit number one or off time? Kyle, maybe you can share your thoughts.
Well, I think that the thing about options is liquidity is king for one, but also collateral is king. So if there's a new options exchange, what we've tended to see is that it goes to a captive audience. So, CME, mainly Americans. Deribit has no Americans. Binance, they have a mobile app where you can buy only. You can't. I mean, so these are targeted at a captive audience, and then and that can be very profitable, by the way. But at the end of the day, that hedging needs to happen. The risk transfer needs to happen in an efficient way with a single collateral pool. And that's why I think Deribit's been around since, it was founded in 2014, live since end 2016. It's been around for a long time. We've had lots of competitors. It's not new to have competitors. There's been many, many, many competitors. The idea is rather that it's a traders first exchange, for traders by traders, and it's where all the liquidity is. So, and where all the collateral is. So that's why, I mean, for us, we use it actually for collateral management mostly. We were long a bunch of calls because that was the most efficient way to be long the market. There were covered call sellers that came in, pushed the volatility way down. That was great for me as a taker, and we loaded up on the upside. And for us, that I could use then my collateral for other things.
Mm-hmm. So what are your thoughts, Philippe? So why trade and invest in Deribit?
So when we started trading in Deribit, it was, I don't know, it was maybe the summer of 2016. And we just started, and the liquidity was basically zero. But we believed when we look at things, we look at things 10 years in the future. And to echo a little bit what Kyle says is, for sure, the options market in crypto is still small. It has room to significantly grow. The thing about Deribit is that it got a lot of things right. It built a system that could handle the amount of IOs, inputs that are required, right, of an options exchange. So because when you have a lot of strips and a lot of maturities and a lot of strikes, and you also have the underlier, you're managing a lot of repricing by market makers, and takers are coming in constantly trying to get updates. And so the infrastructure is critical, and they got this right from the start. They took their time, it took a while, and that's one thing about Deribit is that features come at a pace that may be a little bit slower, but it's also a lot better. It's better quality. And so they got it right, they didn't fall down, and because they were first, they managed to bring in a critical mass of liquidity that's very difficult to undo. It's like network effect. And now you get basically a lot of capital efficiency for large players that are able to hedge their portfolios with portfolio margining, which is a critical thing also that Deribit gets right, where a lot of other players don't get right because their DNA doesn't really come from derivatives. They had a spot exchange, and they're saying, and a little later they came in like, 2 years later and saw that options was a thing, and they basically wanted to replicate, but it's hard to replicate. So yeah, so Deribit really managed to create a nice moat that is keeping them ahead, right? And I think right now Deribit's still 75, some days probably more than that, of DOI out there, or the volume. So yeah, we're very bullish Deribit. I think it's going to be quite hard to unseat in the future. But of course, there are a lot of competitors, and one should never be take things for granted. And so we got to keep iterating and keep innovating but the team is amazing, and I believe that in 10 years it'll be as Kyle said, could be 5 to 10x.
Do you invest in Deribit before you trade on Deribit, or the other way around? After you traded?
No, we started trading on Deribit before we invested, although it was a pretty tight timeline. John, do you remember? Do you think it was 6 months basically?
Yeah.
From the time, I think it was basically 6 months where we met in Paris, and we said, you know what, we like you guys, we like the technology, we like the idea. How can we contribute? How can we help? And we decided on a number of parameters, and we just went at it.
That's nice.
Can I ask Philippe a question real quick, just as an add-on here?
Sure.
So there are many, let's say, Delta One derivative exchanges, futures or perps, which I think originally maybe were mainly Bitcoin collateral, for example, BitMEX, that have been losing a lot of market share to other exchanges which have Tether collateral, which have been gaining a lot of market share. And I don't know if this is a long-term trend or not, but I just wanted to get your thoughts on that. Like, how do you think about Bitcoin versus Tether collateral as it pertains to all derivatives, options and futures and perps?
Yeah, we had these discussions many times, John, about bringing in other collateral. I think a lot of people look at their P&L, their base currency, and the world in dollars still. They don't think about their P&L in Bitcoin. And so I think, a lot of people are more comfortable with Tether or USDC or any other USD stablecoin. And so this is something that probably is where the world will gravitate towards, at least in the short to medium term. It takes a special philosophy to just say, hey, you know what? Forget the dollar. I'm a Bitcoin. Everything in my life is Bitcoin, right? I look at a coffee in Bitcoin. I look at I'm a P&L in Bitcoin. I'm at net worth in Bitcoin. Few people do that. I mean, you got to be a really hardcore Bitcoin maximalist to look at it that way. I know some that are like that, but they're few and far between.
Well, for me, I don't denominate my coffees in Bitcoin, but I do denominate my trading book in Bitcoin. So for me, like, I mean, if I'm making profits, I'm making them in Bitcoin. The exception would be if I'm trading DeFi, in which case I denominate in ETH. But I use the collateral, which makes sense for that. So for me to denominate in Tether seems nuts, to be honest. But I still can't wrap my head around, 5 years from now, are we talking about mainly Tether collateral exchanges? Or are we talking about Bitcoin? I still can't quite get that, to be honest. I have no vision there.
Yeah, look, I think it comes down to, do you believe that Bitcoin will take over the dollar in the next 10 years? And the reality is, I think maybe it's a mix. Maybe Bitcoin grows so much that maybe 10% of it becomes Bitcoin.
Cool.
But, I think right now it really comes down to how most people look at the world. And yeah, I mean, I'm the same. I can converse in Bitcoin or I can converse in ETH, but that's about the two I would consider as valid right now. I mean, and then all other USD stablecoins, Tether included. But it's going to be hard for me to start thinking of my P&L and like Lend or any of the coins.
Right. So, how about you, Darius?
Yeah, but Deribit, so I mean, when we first saw the options market, it was a no-brainer for us to join. Of course, I'm sure the same for everyone here. And then I met John, and I hung out with him in Japan a couple of years ago. I had a few beers with John. And yeah, I think we've been badgering him to invest ever since. So and took us a while as well. So I think for us, I think just an example, like Kyle was saying, that last Friday someone commented that liquidity was bad. Actually, internally when we were trading last Friday, we were like, even in spite of the volatility, liquidity is pretty good on Deribit. It was we got a lot of volume through, no problem, very little slippage. I think we were quite impressed with the liquidity. So I think the options market is definitely getting a lot more liquid, as well as getting bigger. And Deribit's at the core of it. So the fact is, if you see trades anywhere else, whether it be on CME or OKX or any other exchange, it all falls back to Deribit anyway. So it's become the central liquidity, and I think that's a huge moat. If you want to execute a big size, you can't do it anywhere else without much slippage. So as far as practical trading goes, we think Deribit's here to stay for a while for sure. I mean, and its own and of course the team has been very impressive. If anyone who's been in the space for many years, you trade on BitMEX, you trade on other exchanges. I think the experience in terms of what traders need and what traders like. I think Deribit meets some of these needs. So I basically echoing what Kyle and Phil have said.
Thank you, John. Are you happy with your investors' answers?
Yes, very happy. A little bit,
these are all non-biased answers. It's all real non-biased answers.
I'm very surprised. None of them mentioned that you actually look like George Clooney. So I guess that's not the reason why they invested in Deribit.
There's been only one person ever coming up with this George Clooney thing.
So I look like Keanu Reeves supposedly, so don't worry. We all have our own little.
The Chinese beautify app, so you will have more fans in China. So moving on, so Deribit futures and perpetuals volume are actually also quite significant, and a lot of traders from China haven't actually discovered the benefit trading futures and perpetuals on Deribit yet. So Kyle and Joe, would you like to share why they should consider trading not just options on Deribit? Because I know Aeros Capital trade big volume. I'm not sure big volume, but trades futures and perpetuals. So maybe share your views a bit.
Sure. That's for me, Emma?
Yeah.
So we're actually not a market maker for this. We leave that to the smarter guys like Philippe and Darius. For us, we are actually a taker. So we, for the options, we use it mainly as, to retain exposure and keep our collateral useful. It's cheaper for us to do that. And for the perp, it's just an efficient way to allocate capital as well as a leverage product. So yeah, I think, so one of the interesting things that I've been trying to figure out for Deribit is who's the next large client segment? So I think if you were to look a year ago, options basically traded expensive because they were mainly speculators that were buying, right? And then market makers would come in and they would trade implied versus realized. That is to say, they would trade the underlying buy and sell, and then the option they would sell on top of that and try to bring the realized volatility to the implied volatility of the option. And then within the past 6 months to a year, you've seen huge guys, or largely brought in by QCP and others, that have sold that. So yield players that are just looking for the yield and selling that down. And what that's kind of done is that's made it efficient for me, like a collateral hedger to come in and buy that up. And so there's always this give and take where there's the speculator that makes it attractive for the yield player that pushes it back down, that makes it attractive for the collateral guy like me or the minor hedger on the downside. Who's the next person? I don't know who is best to answer this. I don't know, maybe QCP, Darius, do you have an idea?
Well, I think it's very clear because we are like the initial yield guys, right? But what we've seen is the private banking guys. This is a world in negative interest rates, right? You go to Japan, if you tell them I can offer you 2%, they're like, the saliva starts dripping from the mouth, right? It's negative interest rate. So you go to a private bank and you offer private banking clients say 10% yield, which given the implied vols in options is nothing, right? I think the private banks are eyeing the space. We've had conversations with several of them already. and they think that this is the next scalable product for them to launch with high yield and moderate risk. And people are starting, and their clients are starting to understand crypto as well, and it's starting to warm up to the idea that it's not some crazy suspicious transaction asset. It's becoming a mainstream asset. And I think we are at that inception point where these guys are willing to deploy and allocate into crypto and go for the yield. So I think that's where the next scale is, right? The private banking, wealth asset management side of it.
What do you think?
You know, we've also seen maybe some more exotic products coming out too. You guys are pitching some new interesting products as well, right? That are kind of built on that liquidity.
Yeah, exactly. So I mean, stuff that's relatable to this segment, like I mentioned, right? Guys who are willing to deploy capital and just sort of get the high yield, willing to take some risk as well. And you see the usual dual currency stuff, accumulators, that kind of thing. We know that there's a wall of money in the world, like chasing after this kind of yield. So very exciting in terms of like how that gets deployed, and what kind of exponential increase we see in the space when this happens.
John, what do you think?
Yeah, I think that maybe for crypto in general, but let's stick to Deribit now. That the audience is quite diverse. So what I hear from traders is that contrary to certain traditional markets, the trading is very varied. Let's say there is also a lot of speculators, giving more opportunities for traders. Basically, it goes in both directions. So it's not like a market where the same type of traders are competing with each other, but there is a lot of different type of traders, making it, I think, at this moment, the most interesting market to trade for basically any type of trader.
Mm-hmm. Okay, thank you.
This is for both the futures and the options on maybe any derivatives platform in crypto.
John, why do you think that exotic derivatives haven't taken off quite yet? Options have been on your platform since 2016, but we don't really have like a strong structured product crypto space yet. It's starting to get there. I mean, QCP's doing some stuff, others are looking, but really hasn't taken off yet. Like, in a way that equities is huge. Like the structured product space is ridiculously large in Asia right now.
Yeah, like some people until like a year ago mentioned that crypto is not mature enough for an options exchange, for an options market. So now you are putting it one step ahead and saying like, where are all those structured products that should be there? So I think it's getting there slowly. The crypto market isn't also that huge if you just look at the total market cap right now compared to traditional markets. So I think it's just slowly growing, like, and that's the reason why it's not there yet. But honestly, I'm just talking about the options exchange part. I'm kind of being surprised that when I started it in 2014, I would have expected more exchanges offering what we are offering today. Like I would have expected more competition.
Why? But it fell. Because it fell, and all the traders come back to Deribit. So
yeah,
that's true actually.
Yeah. So options trade on exchanges and bilaterally, and the bilateral market is bespoke and opaque. And how does the bilateral options market operate, and who are the players, and what are the products, and how does it relate to the listed market? Kyle, would you like to share your ideas?
I'm happy to, but really this question should be for Darius. He's very much involved in the OTC bilateral space. Maybe he can speak to what kind of client or players are in bilateral, and then how that relates to the listed Deribit market.
Honestly, thanks, Kyle. Honestly, the right now the options OTC market is very much between the more institutional players, right? The guys who who are market making again on the order books or against retail or against their bigger clients as well. There isn't that much OTC facing clients per se. So I mean, let's sort of define here, right? OTC meaning like we do pure bilateral contracts with variation margin, like as per the FX option space between two institutions, governed by an ISDA. So that market is very small. It's between more established players. When in terms of OTC facing clients, that tends to be a bit more like a structured product type market, where there's a certain product, a certain strategy that you sell, and then the guys deal with you on a bilateral basis. But that's not governed by an ISDA or anything. It's more of a client product kind of thing. So to answer your question, the OTC market is still very sort of a tight community. ISDAs are very tricky to do without the traditional market infrastructure like that the banks or the funds have. So I think there's a limited scale in which that is like the bilateral ISDA market can grow. I tend to think that the scale would still be more on exchange like Deribit, because the collateral management is handled. You don't have to deal with credit risk, and that's a huge thing, because the credit risk is a huge thing in the space, and Deribit actually solves a lot of that problem.
Yeah, that's right. I think when you talk about bilateral, right, and just to jump in quickly, the minute you start talking about bilateral products, you're talking about fragmentation of liquidity, because you're basically facing just one person. There's not a whole lot of price discovery going on. And so those products are usually, they require a whole lot more operational work around them, right? So I heard the mention of ISDA. And the minute you start talking about ISDA, I mean, like, I haven't even seen an ISDA in the crypto space that really makes sense. It's super structured legally. From a margining perspective, it's a pain. Like, how often do you margin? You do it weekly. You have to agree on so many things with your counterparty, and then you have to trust your counterparty. One of the things that we've done in this space is we've invested in a company called XMargin, which is basically trying to solve this particular issue of basically margining on a real-time basis without having to divulge your whole portfolio to anyone, right? So it's basically using zero-knowledge proof. You basically upload your portfolio, whether it's at Deribit or BitMEX or whatever you have, and that basically pool just understands what you have, what your risk, the risk that you have, and it can margin and automatically settle any bilateral products or instruments that you have with another counterparty. And you can basically do it with a huge capital efficiency, because if you trade a call on one side and you trade that same call but the other way on another side, you're margined twice. You get no capital relief in any which way in the current system. With a firm like XMargin, now you're basically going to be able to get capital efficient, and that will make pricing discovery easier, basically the bid ask tighter, and it's just going to be better. So volume is going to increase for sure in bilateral. You're going to have the structured products that you expect of the space. I think miners are natural buyers of structured products because they have specific, they have broken strikes and specific reasons to do certain things that maybe they can't get in a classic exchange traded product, a Deribit, right? And so we're certainly looking at this space. This is the next space. And also what it does also do in bilateral is that a lot of regulated counterparties cannot trade with certain players in the space. And so with a bilateral, they can choose who they face, right? So that's going to be big for them. And I think more traditional institutions are going to be able to come in also and trade those structured products in a way that makes them feel comfortable.
John, do you have anything to share?
Well, we've received a request in the past about us adding the functionality to the platform to basically let the customer add their own expiry and their own strike, which is because sometimes, for whatever reason, a client or institution wants wants to do a different contract than the ones that we offer. So we would like to cater to this market, and we are thinking about how we could implement such a thing into Deribit, but it would have some specific problems, specifically with risk management and liquidity. So we are not quite sure if we would go that way anytime.
Okay, thank
I
you.
don't think it makes too much sense. When we were I used to be on the Korean Futures Exchange advisory board, and every single year, the #1 topic on the exchange was, should they offer weeklies? And every single year it got shut down because the exchange, they wanted to make it an open forum, and this was #1 topic every single time, but it got shut down every single time because they said it's going to cannibalize our liquidity on our main contract. And I feel like that's always the dynamic with an exchange. Like there's sure like OTC bespoke stuff, which happens, and it almost needs to happen separate, like on a separate part of the exchange or something like that. But like on the exchange itself, it's focused on concentrated liquidity in the highest volume way, even on, like on the highest throughput, and that's what Deribit shines at, right? Like they're the #1 liquidity for Bitcoin and ETH options, right? So soon to be more, right?
Okay, maybe I not completely agree with this part, but no, in the sense that I mean that if we would attract liquidity from a different expiry, anyway, it would add liquidity also to the other products. It would not siphon away liquidity from our standard expiries. I don't think so. It would be an extra pillar there. Just there are some issues with risk management, liquidation of such an account. If it's not visible for all the rest, there are just two parties trading it. What is the mark price of such a contract, etc. Because it wouldn't be bilateral anymore, but it would be with Deribit as a counterparty, right? As a central counterparty. So that was more the issue that we were seeing. But maybe it's also cannibalizing, but I would actually think the opposite. So I would love to catch that part of liquidity as well.
Thank you, guys. So I know you are all like one of the best top traders in the space. Can I ask the question, what's your favorite trading strategy of all time to all the guests? Do you still trade today, John? I know you used to be a trader.
I'm testing Deribit so now and then if it's still working, no, I'm not really trading anymore. But I have a tendency to be a short options trader, but I don't advise it as strategy. It's more like a personal thing. So
By the wings, baby. By the wings.
Yeah, I would like sell the wings and get some free money basically, but then sometimes you will get the unpleasant surprise. So, but it's really just a personal thing, not no.
It's
No serious trading anymore.
It's going to be a personal thing for you as well, Philippe.
I'm sorry. Say again.
I'm joking. I said it's going to be a personal thing for you as well. It's like no sharing my favorite trading strategy. It's too personal.
Oh, I don't have a personal. Yeah, I don't have a favorite. I like trading strategies that make money. So whichever one is making money is mine.
How about you, Darius?
No, I think a good general strategy that has worked for us as well. I mean, in general in the space, right? You know, whether you're retail or whether you're professional, I think selling cash covered puts has been a good strategy. You know, I mean, especially if you're bullish in the space, you sell cash covered puts. You know, you don't risk too much because you're not using leverage, and you're not going to get killed if prices move too much. At the same time, you sell cash covered puts on Deribit, you get your premiums in coin, and so the premium you earn from that is a bit like a free option on Bitcoin or Ether, right? So that's a good way to accumulate coin. Just sell some puts, and just manage the leverage.
How about you, Kyle? Thank you, Darius.
For us, one of the staples has been futures basis trading. So looking at either the perp or the future, versus the spot, and then a borrow against that. And that's been a trade that we've done since 2013 in various capacities. We still do it today. Every year, people say it's going to disappear when more capital comes in, and arbs that difference, and it just goes on forever. So I think as long as Bitcoin keeps growing, the amount of capital needed for that strategy will keep growing, and the reality is there's always some sort of basis there.
Thank you, guys. So I have one last question for John. John, Philippe, XBTO is starting like a new VC, right? So I hear from another interview that Philippe is actually looking to invest in more exchanges. Do you approve if he's going to invest in something option exchange? Will you approve that?
I think nobody needs my approval for any investment. So nope, I don't have any problems with that. No. Honestly,
Thank you, John. But I would let you know anyways. But we've actually had this discussion.
It would be
before.
nice to let me know at least, yeah. But
we've had this discussion before, so we've looked at.
Yama's trying to test the bonds between the investors here.
So really a very big thank you again to our fantastic guests tonight. Without you, the hour we love Deribit would just not be possible. I look forward to seeing you all in person very soon after coronavirus. We don't know when. Hopefully, maybe end of year. And so thank you guys again. Thank you. So good night from Beijing.
Thanks, Yama. Bye.
Bye-bye.
Bye. Thank you, guys.
Thanks, Yama.
Thank you.